Gold experienced another sharp decline yesterday, continuing a strong downward trend that has dominated the market throughout May. After briefly rebounding to around $4,527 per ounce, prices fell rapidly to a low near $4,401, marking the weakest level in almost 2 months. Early trading today showed little recovery momentum, with gold remaining under pressure near the $4,400 range. Since the beginning of May, gold has fallen from around $4,770 to the current $4,400 area, representing a monthly decline of nearly 8%. Compared with the record highs reached earlier this year, prices have now corrected close to 20%, highlighting a major shift in market sentiment. Several factors are driving the sell-off. Geopolitical uncertainty remains one of the biggest influences. Reports surrounding possible diplomatic discussions in the Middle East briefly improved market sentiment, reducing safe haven demand for gold. However, conflicting statements from multiple sides and renewed regional tensions quickly weakened investor confidence, leading to large-scale profit-taking across precious metals markets. At the same time, expectations for higher interest rates continue strengthening. Federal Reserve officials recently signaled that additional policy tightening could still be possible if inflation remains elevated. Global central banks are also becoming increasingly hawkish, pushing bond yields higher and increasing the opportunity cost of holding non-yielding assets such as gold. Institutional sentiment has also turned more cautious. Several major financial firms have recently lowered short-term gold price forecasts, while holdings in large gold-backed exchange-traded funds continue to decline, reflecting weaker investor demand. From a technical perspective, market momentum remains fragile. Long-term moving averages are beginning to show bearish signals for the first time since the previous major rally started, increasing concerns about further downside risk if key support levels fail. The $4,400 area is now viewed as a critical support zone. If prices break below this level decisively, analysts believe the market could quickly test lower ranges near $4,370 or even $4,300. On the upside, gold would need to recover above the $4,450, $4,475 range to stabilize short-term sentiment. Attention is now focused on upcoming U.S. inflation data, especially the latest core PCE report, one of the Federal Reserve's preferred inflation indicators. A softer-than-expected reading could reduce interest rate fears and support a rebound in gold prices. However, if inflation remains strong, pressure on the gold market may continue to intensify.